What is going on, everybody, to a new day of the bootcamp. Today, we're going to go over the full strategy that managed to get me my first payout and my first pass on my funded accounts. Let's get into it. Right now, I will show you guys some proof of my payouts and my funded accounts on the screen that I managed to get with this exact simple strategy that I'm going to teach you guys in this video. If we're going to look at step 1, we need to decipher when there is a valid pullback. There are two rules to identify a valid pullback. One, we pull back to the premium or the discount zone, or we make a connection with the previous supplier demand zone. So in this case, we see that price created a low, a high, a higher low, and a higher high. Now, in this case, this is a valid pullback. Why? Because we went towards the previous demand. So there is a chain of supply and demand. And two, we went below the 0.5 Fibonacci retracement tool, meaning we have two rules that this is a valid pullback. Once we break this high, we know, okay, we're going to be trading within this high, with this low, and this high. Why? Because this was a valid pullback. Let's just say price did not come towards this Fibonacci retracement, and we just had this, right? If we just do this, this is not going to be valid. Why? Because we did not get a retracement in towards the 0.5 fib, and we did not come in towards the demand zone. So the chances are this will be used as liquidity to tap inside of the 0.5 fib or the demand zone to then look for further highs. All right, so people are going to think, okay, this is going to be a change of character, but it's not going to be. So this is just pure market structure and rules that you need to have for yourself. If we're going to go over the videos I made for Bootcamp day 2, day 3, day 4. So if we're going to look at day 2, it is Forex pairs. Now, what are Forex pairs? Forex pairs are two currencies that are going to fight against each other. This is my list. You can copy it if you want. These are all the Forex pairs I trade. Now, if we're going to look at day 3, market structure. First of all, what are we going to do when we're going to come to the markets? For me, I use the weekly and the daily to give myself a bias for the next weeks that are coming. So I know that I'm targeting the correct highs and I'm selling towards the correct lows. In this case, what do we see? We see that we have a clear bearish market structure, right? You can see that we're going lower. An easy way to identify structure is to grab this tool. It is the regression trend. What are we going to do is we're going to get from the high towards the low, or just basically from a period of time that you want. So let's say we are just looking at this period in time, and we know, are we bullish or are we bearish, and we're not seeing it clearly. We can just grab this regression tool and we can do this. You can clearly see that this regression tool is pulling us downwards, right? This is not support and resistance. This is just an identification of where price is going. My tip to do is to go on the daily or the weekly and identify the latest break of structure. Now, what is a break of structure? A break of structure is a close above or below a previous high. In this case, we can see here's another break of structure as well. And here's the most recent break of structure. So what does that mean for us? That means that we are currently trading within a swing high and a swing low. If we're going to look at this, price moves like this. So we create a low and we create a high. In this case, this is this low and this high is this high. Now, what can we identify? This high does not get visited again during the next impulse, right? So this low is lower than this low. Well, we can see this low, this high is lower than this high. There is a reason for it, right? Price is battling. We need to find the currency that is winning. In this case, the Swiss franc is winning against the Australian dollar. If we are going to look at the thesis of what I said, we need a demand zone connection or a supply zone connection and the 0.5 retracement tool to identify a valid pullback. If we have the break of structure, we're going to grab the high that was created within the break of structure, and we're going to drag it in towards the low that we created, that we need to break in order for us to count it as a break of structure. What do we see? We go above the 0.5 Fibonacci retracement tool. And let's see if we make a connection with the weekly supply zone. Yes, we do. Here you can see we have a supply zone. So a big buy before the stronger sell down. You can also count this as your supply zone. But in this case, we also have this tiny supply zone that is in control. If we're going to look on the daily, we can see we made a connection. So this is a valid pullback. This is what we want to look for. Okay. Now, let's look on the next break of structure. If we're going to look here, we can see we make a low, make a high, and make a new low. So is this a valid break of structure? We just identified, yes, it is. So we know that right now we are trading within this high and within this low. Now this is step one. So this is our overall low and this is our overall high. If we're going to make it text, this mark overall low and overall high. Why do I do this? To know where I want price to go on the higher time frame. So I want price to go in towards the downside once we actually come towards this Fibonacci retracement tool. Right? We can see that this area is an area we want to sell from, and this is the area we want to buy from. So right now in this area, I am not looking to buy because price is exhausted, in my view. Now, step two is go on the weekly time frame and look where price is at the moment. We can see price is inside of the premium area on the 0.5 Fibonacci retracement tool. So we are looking for sells. But what do we see? We see that the weekly supply zone or the weekly demand zone is still in control. We see a break of structure in towards the upside, see a break of structure in towards the upside, and we see a break of structure maybe in towards the upside. Now, what did I tell you guys? We have liquidity and we have supply and demand. Now, this was the last video. So if we're going to look, we have on the weekly time frame overall supply and demand zones. This isn't a supply zone. This is a supply zone. And overall, this is a supply zone. So we need to narrow it down. Where is liquidity for us? Have we taken any liquidity inside of this leg? No, we haven't. We only have seen this one, but we did not see a great enough reaction for us to continue lower. So our target is going to be this high right now. Why? Because we know that price needs to take liquidity in order for us to fuel the next leg lower. So if we're going to look on the lower time frame, you can also see we are trying to break structure in towards the upside after taking liquidity. See this low, this was a fake out. And if we're going to look at the connection rules, you can see that the overall sell down before the bigger buy up was not visited. Maybe let's look at the Fibonacci retracement tool. Fibonacci retracement tool did give us a valid enough reaction, but this is, this was just a little bit filthy price action. So if we're going to look on a daily time frame, we know that price needs to form liquidity and take out that liquidity. And we need to see, hey, does price make a connection with the supply demand zone that is currently in control on the higher time frame? In this case, we're going to need to see this liquidity point being taken. We're going to need to see a change of character to then see a new reaction towards that supply zone that was being created during that change of character. Let's go in the lower time frame on the daily. Our objective is to target this high. Why? Because there's the first point of liquidity on the weekly time frame. So what am I seeing? Okay, currently this is the break of structure that caused price to move higher. Now what do we know? Okay, we know that this is a demand zone and the demand is in control, or the supply is in control, as long as you have order flow just moving in towards your direction. If we're going to look on the 4-hour time frame, what do we see here? Okay, we can see that this is still the break of structure. This is just a liquidity sweep, so that's why we also did not count this as our valid change of character low. And what do we identify within this demand zone? Within this demand zone, you can see clear liquidity right here. Once we took this liquidity, you saw price started to go slower. We do not see these red candles right here. You can see a descending channel or a descending wedge, which I use for me to identify if this supplier demand zone is in control. In this case, it is. How do we see that? We see a valid change of character. So if we're gonna look at some previous videos, you can see fractal wise, we make a low, we make a high, we break this low, we break this high. So in this case, we can see that the down close candles are currently in control. Same thing, down close candles are in control. And then here, these down close candles did not make a connection. So what do we see here? We see a break of structure. What do we see here? We see another break of structure. Why do I prefer this wick? Because it is fractally in control. And once we know that fractals are holding, the higher time frame is going to hold as well. So our job is to identify if the daily is in line with the 4 hour. If the 4 hour is in line with the 1 hour, the 1 hour is in line with the 15 minute. Now in this case, if we drag our Fibonacci retracement tool, this is a valid low, right? Okay, we did not make the connection with the demand zone, but we did make a connection with the Fibonacci retracement tool. If you're going to look at the 1 hour, what do we see here? We see liquidity being taken, right? Now, once liquidity is being taken, we saw a fractal break in towards the downside. We saw another fractal break in towards the downside. We saw a fractal break in towards the upside, meaning this zone should be in control. Okay, so this is a demand zone. Now, in this case, we see another fractal break of structure in towards the upside. We see another fractal break in towards the upside. Here we see retracement in towards the demand zone and 0.5 fib. And what do we see? We see liquidity being taken out. Boom. And then on the higher time frame, we can see this is a new break of structure on the 4 hour. Correct? So if we're gonna keep on holding our order flow trend, we are gonna see, okay, we broke structure. So this is gonna be the overall demand zone. Once we make our connection, which you can see we did here, what do we also identify? We also identify that the Fibonacci retracement tool has been targeted, has been hit. And what do we see? We see a break of structure in towards the downside. We see a change of character in towards the upside, meaning this demand zone is currently in control. If we're going to look on the lower time frame, we can see price closed here, but we saw a reaction from this liquidity low. All right. So our job is now to catch the order flow move back in towards the upside, back in towards the 4 hour or the weekly high right here. So if we're going to go over the steps, we mark our overall high and low. Step 2 is we're going to mark our targets for upcoming weeks. Step 2 is we want the order flow. So step 3, mark out our order flow. Ask yourself the question, is supply or demand in control? Question mark. In this case, we can see demand is currently in control. We see demand doing their job. Reaction, 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 reaction. Okay, so we're not going to try and sell this, right? Because we are seeing clear bullish moves. Now, the fourth step is go from time frame to time frame. Now, in my case, I use the weekly towards the daily towards the 4 hour. and then maybe the 1 hour. That's it depends what I want to trade. For gold, I use a 1 hour and a 15-minute because it's just a very high volume indice. Step 5 is mark out liquidity inside our order flow. This is it. No, step 6. Wait for a shock in towards the upside. This is it. This is it. You're not going to need anything else. Maybe fundamentals, but we're going to go over in a future video. Mark out the overall low and overall high. Mark out our targets for upcoming weeks. Mark out the order flow. Go from time frame to time frame. Mark out liquidity and wait for a shock. Let's go and test it on another chart. So you know I'm not lying to you. I can do this on every single chart. Okay, so if you've seen my previous videos, you know I like to mark out my ranges from zones, within zones, okay? So we know that we have retracement and we have impulse zones. Now this is clearly an impulse zone. Why? Because this is in line with our order flow, right? We broke this high, so this is an impulse. What do we see then? We see a pullback in towards liquidity, which is what we want to see, right? We see this low. After this low has been taken, we can see that we made a reaction or connection with a demand zone within the 0.5 Fibonacci retracement tool, like so. And what do we see here as well? We see a break of structure in towards the downside. And we see a change of character in towards the upside, like so. Now, if you see this happen, after a low being taken, we're gonna see this demand zone acting as support. Now, if we're gonna go on the lower time frame, you're gonna see something happen. Let's go on the 15-minute. What do we see? We take out this last point of liquidity, and you see price started moving sideways. Starts pricing moving sideways. What do we know from liquidity? Sideways price action. We know that the low loves being swept and to target the high. What do we see? We see a low being created, a high being created. We see price sweeping out this low. And we see price reversing in towards the upside, creating a new break of structure. And if we're going to look at this right now, we are going to see order flow being held. Okay, so we see a break of structure. We see, let's look on the 1 hour because it's a lower time frame trade. We're going to see as well the impulses and the retracements, right? This is an impulse. We see a retracement in towards liquidity, right? We see all of these lows being stacked. We see price taking out this liquidity. We see a new move. So this is the pullback. Here we see a new impulse, right? This is a new impulse. So if we identify the zone that we are in, we can easily see where is price headed and what does price want to do. So, right, if we are in a long position, right, so let's say we want to enter on the break of structure, there are stops below this low, targeting a new higher high. We know that once price breaks this high, we do not want to put our stop loss towards these lows because we see this low is trying to attack this low. We see this low is trying to attack this low. This low is trying to attack this low. And then obviously this low is going to attack the low, right? It succeeded. So if you put your stop loss there, you can see, shit, I would have been stopped out. And that's not what you want to do when swing trading. Because when swing trading, everything can happen. So break of structure. We target this high. And we're just going to let it run. This is our setup. We're not going to touch anything, right? This took, let's say, this took a week. a week. Now, but let's say we are in this position and we want to take another position. We're not going to force ourselves, but we know that we can scale down from time frame because we went from the 4-hour for our fractal, 4-hour demand in control, 1-hour liquidity that was being created. That was also in line with the Fibonacci retracement tool. And what do we see? We see price sweep this low. So what could have we done? We could have entered a new position instead of placing our stop loss towards there. We're stops below this low, and we could have targeted a new higher high. This would have totaled 3R in 1 week. So 3R in a week. Let's say you take that on 300k accounts with risking 1%. That's 9 grand that you just made in a week without doing shit, right? Because you are still inside of this change of character, just stops below this low, targeting a new higher high. No, that's 4R. That's 4R. See? And that's how you scale in to your positions. Here you can see the same thing happen. We see liquidity. Price sweeps the liquidity. You can obviously wait for a valid change of character, but it doesn't happen. Or it does happen, but you need to wait a while, right? Here you can see price breaks this low. Price breaks this high. We see a new retracement, meaning this demand zone is currently in control. Why is this demand zone in control? Because after we swept this liquidity, we had a break of change of character. So let's drop to the 15-minute. And what are we going to see? Most likely, we are going to see a break of structure, and a change of character. So this is how you implement it into the lower time frame, which stops below this low. You can target a new higher high. And if you really want to push it, you can target this in towards the highs. But that's highly conviction and very unlikely to succeed. But it does still work. That's how you can scale from time frame to time frame. So if you have a demand zone that is in control on the daily, we see liquidity. Right? Let's say this is the liquidity. And we see this happen. What do we know? We know that liquidity has been taken. We saw a change of character. So what do we know we can do? We know that we can place a long position here, which stops below this low if you want to play it safe. Stops below this high, below this low, and target a new higher high. Well, obviously, this is a much greater risk to reward. You go from a 1 to a 2 risk to reward when you're waiting on that change of character. And then maybe on the 1 hour or on the 4 hour, you are going to see, let's say this is another liquidity point, this being swept out, change of character, retrace, impulse. So what can we do? We can place another long position on that change of character, which is stops below this low and targeting this higher high. That's why I love swing trading, because within swing trading, you have intraday trading. Within intraday trading, you have day trading. Within day trading, you have scalping. So swing trading is the biggest plan that you can get, right? So this is just scaling in. When you're in a position, you want to you do not just want to target one thing, right? Clearly you can see here new liquidity here as well. What do we see? Sorry, we can see that this weekly demand zone is in control. So what do we know? We know that once we get that change of character, like here we see a break of structure, we see a change of character. So meaning this is a demand zone that is going to be in control for the upcoming weeks. If we're going to go on the 4 hour, we can see that we have liquidity. What do we also know? We need to make a connection with the Fibonacci retracement tool or the demand zone. And what do we see? This liquidity or these lows are right above our demand zone. So what do we want to see? Boom, boom, boom. We can take a long position and it shoots straight up. So what do? We place a long like this. It's just a repeating process every single time. So we go from the weekly to the daily to the 4 hour to maybe the 1 hour. And it just goes from this. And it just goes from this to this. Okay. This is our demand zone. We have liquidity inside or above that demand zone. We get a change of character. And we target the upside. Like so. Maybe if you do get that change of character very recently, you get this. This isn't hard. It isn't hard. It totally is not hard. You just need the discipline and the patience for it. Because if you're going to fuck yourself up, you're going to think, oh, we had a change of character there, but we did not have a change of character there. It was just a liquidation of previous sellers or buyers. Don't overthink trading. Think of it logically, right? People are going to say, oh, this is a break of structure, this is a change of character. But you need to see the bullish intention of it as well. The weekly, look at this. On the weekly, supply and demand was still in control. So there was no reason to panic if we had this change of character. Because the weekly, we know that we are still in an area where buyers could have stepped in. Okay, so go from the weekly to the daily to the 4 hour to maybe the 1 hour for scalings. Now, if you have any questions, make sure to DM me, make a comment. I will make sure to help you out. If you want to support me, make sure to use the link in my description to get a prop firm or a brokerage account. And I'll see you guys in the next video. Peace out.